Welcome along to today's article where I look at a leading economist, Dr. Andrew Wilson, is being interviewed by Michael Yardney. So Michael Yardney is a leading property advocate all across Australia and been in the industry a long time. He gets really good feedback. And Dr. Andrew Wilson's been a leading economist for many years and has really got good insights into what's happening in the market. And what we're reviewing today is the latest interest rate rise that we saw, interest rates increasing to the base rate to 3.85% last week. Of course, that's going to affect the mortgage that we pay, whether it's for our own home or the investment property. Of course, the previous month in April, we saw the interest rates being put on hold. And what we did see from that time to now is we're starting to see that home buyer confidence come back into the market. So we can look at the stats and data behind that. We'll also look at the research where Dr. Andrew Wilson goes in and shows us the stats on the booming auction clearance rates that's happening right around Australia currently. And we look at the official interest rates over time there. We've seen that decline over the last few years, and then we've seen those rates from about the middle of last year started to increase quite sharply. And now we're getting feedback, and the RBA is indicating that those rates will start to stabilise now that inflation is starting to get under control. And we're starting to see the effect of that combination of those higher interest rates affecting the economy, and now the household spending is starting to come back under what they expected, and that's going to help reduce inflation as we roll forward. The other interesting fact is, although we've had rising inflation and our interest rates have really tripled since they were at the lowest point we've ever seen, is that the retail spending has still been quite strong and property prices have still been increasing. So as well as inflation being looking to take under control, the other interesting thing was as the cost of consumer goods went up, we still saw an increase in retail sales being higher than they've previously been. So that's really surprising when we're, as home buyers or investors with mortgages, we are facing higher holding costs for our properties. The other surprising fact is now we're seeing an increase in the amount of housing loan commitments, and it was the first rise in over 12 months. And you can see from the chart there with those rising rate rises from the middle to late last year, we saw that drop in lending, and now we're actually seeing that market turning as the number of loans are starting to increase across Australia. And I'm sure that's related to home buyers and investors realising the property market isn't going to collapse like those market expectations, and now we're actually seeing that the prices in most capital cities are starting to increase now. The other interesting fact from the latest monthly results up until March was that the number of home buyers have increased. And that market really declined when those interest rates started to climb as their borrowing capacity reduced and also their ability to finance the properties. But what we're seeing now is I think a lot of those first home buyers have just continually seen those rents rising over the last 12 months and realising that it's more important than ever really to get into the property market. So the first home buyer segment of the market was the largest segment of new loans being written. And right across the board, we saw an increased number of new loans being written across owner-occupiers, first home buyers and investors. And we saw Queensland as having the highest number of loans as well, up 9.3%, which is quite a significant figure over the last 1 month, 30 days. The other thing that we're seeing over the last 30 days is auction clearance rates. They dropped with those higher interest rate rises. There was a little less confidence in the market. I think a lot of home buyers and investors really sat on the fence, weren't prepared to make the decisions because they were really concerned how those rate rises were going to affect the property market. The reality is now that most people realise the market is going to perform very strongly. Even the major lenders are forecasting strong growth between now and the end of the current calendar year, and people are realising now they really need to get into the market if they want to buy before the next price rise. So the national auction market rate over last weekend was 79.7%, which is a very high figure. And higher, we've recently seen those auction clearance rates increase over the last few months, especially since Christmas. And breaking it down to the capital cities, Melbourne have a 78.1% clearance rate, Sydney 79.8%, Brisbane 74.7%, and Canberra 75.2%. So very high statistics. And you can see that in the chart there, those auction clearance rates generally trending up. So what does that mean for the property market? I think it means overall that buyers there that have been not sure making that decision and really been holding back, sitting on the fence, are realising that the market isn't going to go down. We're not at the bottom of the market, we're pretty close. And those buyers really realise now they need to get back into the market. So we're seeing that confidence level, and now we're seeing it reflected in the data. So I hope it's given everyone a bit of an overview of the property market and recent up-to-date market research and data. And this is the data you need to make your property decisions on. Thanks for watching.